We are joined from Dubai, Bhavik Mehta, Chief Market and Century Financial. Bhavik, thank you so much for joining us. We are talking about Powell, what he said yesterday, and also the inflation data tomorrow. But first, if we look at the futures now, currently they are still in green. Um, S&P, Nasdaq, and Dow Jones are slightly up, futures, I mean, but all airlines are down in the futures after the announcement from FAA, Federal Aviation Authority, Civil Aviation Authority in the US, which said that it's suspending all trips until a technical issue is resolved. We saw a direct impact on airline stocks. So, until when do you think this impact continue, or is it just temporary until this technical issue is resolved?
To the best of my understanding, it's a matter of few hours before this entire technical glitch actually gets resolved through the FAA servers. So the current sentimental dip in airline stocks is just based on this current news event that is flowing in the markets. It's not a major shift, I would say, in the overall sentiment. And if we talk about the tomorrow's CPI data, that would be the much washed out data print for the market, because as we've seen with the last Friday's US wage numbers, I would say pretty much disappointing, lower than the previous estimate and even lowering of the previously revised estimates. So overall, the markets are hopeful. Markets want to be positive with the fact that with the wage growth, US labor wage growth showing signs of slowing down, and maybe even if the inflation data comes down a bit lower tomorrow, then maybe the Fed will actually announce something to do with its particular pivot policy.
What do you expect for the monetary policy in this case? We have heard numbers from central bankers in states. They put the terminal between 5 to 5.75, but some investment banks are putting it above 6%. What are your own expectations, even if better than expected inflation tomorrow?
In scenario where inflation numbers actually rise and Fed actually has to stand with its hawkish policy, we do not see the Fed giving us an estimate that is more than in the range of 5.25 to 5.5%. Our best guess estimate is, even in a scenario where, let's say, energy prices rise, the wage growth keeps on holding, the inflation numbers actually don't peak out and even try to hold steady near the previous highs, Fed would like to go into more of a wait and watch approach instead of giving a higher calls for 6 to 6.5% range.
If we speak about the scenarios developed by some investment banks, they expect the Fed has repeatedly said that its target is to lower inflation to 2% target, and it put it happening in a near term. But then investment banks are 2% or even 2.5 percentage points is very far fetched, and it's difficult to reach it by the Fed. When do you think we'll reach it?
Difficult to give a time frame again. There are many market models which try to forecast and model how the goods inflation, how the service inflation will flow. The most trickiest part in forecasting as to when the US inflation will come near or below the 2% range is calculating the exact import of, I would say, the commodity prices. Now, we can all estimate that if the labor market slows, the services economy comes down. You're talking about the slowdown in rent, utilities, and other such services component. But as far as forecasting or predicting on oil prices or even the core commodity prices comes, it's a very tricky job, because look, we have different factors in play. On the one hand, we have a bull commodity market rally, which is supported by an argument that China reopening will be completely inflationary. It will be bullish for the primarily for the energy sector, commodities as well as the other agri commodities. Similarly, on the other hand, we have a bear market bear market downfall commodity group, which typically is trying to take comfort in the fact that should a US recession actually materialize, this could spread across the globe. So this is where we have two diverse range of views spread across both the markets. So forecasting it, giving it a particular date range would be tricky at this point of time.
Bhavik, Mehta, thank you so much for having us from
Thank
Century
you.
Financial. Have a nice day. Thank you so much for having us from Dubai. Have a nice day.